Welcome to today's market report. European shares turned flat after opening marginally lower on Friday, a day after the European Central Bank took a less dovish tone than expected on stimulus, while growing prospects of a no-deal Brexit kept risk sentiment subdued. The Pan-European STOXX 600 index was flat at 8 o'clock this morning and was on track to end the week with gains. Oil and gas stocks were among the biggest decliners as crude prices fell. DAX traded 0.2% lower, CAC 40 dropped 0.1%, and FTSE was up 0.1%. Rio Tinto stock rose 0.3% after announcing that Chief Executive Jean-Sébastien Jacques, who has led the mining giant since 2016, will step down after the company destroyed an Aboriginal heritage site in Australia while developing a new mine. Swiss frozen baked goods maker Aryzta jumped 11% after it said it was in advanced talks with private equity firm Elliott Advisors over a takeover deal. French telecoms company Altice NV surged 26% as its founder Patrick Drahi moved to take it private after an alarming stock slump this year. Oil prices weakened today, hit by a surprise rise in US crude inventories, which raises concerns about faltering demand from the commodity's biggest consumer. The futures traded 0.1% lower at $37.27 a barrel. Brent fell 0.3% to 39.96. Both major benchmarks are down around 6.5% for the week and headed for a second week of declines. Gold futures fell 0.7% to $1,951.15 per ounce. On the FX front, GBP/USD stalled its recovery momentum after the UK GDP for July missed expectation and grew by 6.6%. The spot now is trading around 127.90 to 128.20. The extremely oversold conditions on intraday charts extended some support and assisted the GBP/USD pair to rebound from the 127.75 to 70 area. The pair maintained its positive tone above the 128 mark, albeit lacked any strong follow-through following the release of softer-than-expected UK monthly GDP print. The ONS reported this Friday that the UK economy recorded a growth of 6.6% in July, as against 6.7% expected and 8.7% in June. The slight disappointment was largely offset by stronger manufacturing and industrial production data. Nevertheless, the figures reaffirmed a continued rebound in the economy amid the further reopening of the economy and extended some support to the sterling. The pair's inability to capitalize on the move clearly suggests that the recent bearish pressure might still be far from being over, hence any subsequent move up might still be seen as a selling opportunity. The EU-UK emergency meeting turned out to be a disappointment. Odds of a no-deal Brexit scaled up after the EU gave a 3-week ultimatum and threatened legal action if the UK still pushed for the internal market bill. The bill is up for debate on Monday next week, while the Brexit talks are likely to continue to next week as the negotiators meet in Brussels. Euro-dollar keeps the multi-day recovery well and sound above the key barrier at 118 and the figure at the end of the week. The pair is up for the third consecutive session on Friday, extending the rebound from lows in the 117.50 region recorded earlier this week. The pair managed to briefly surpass the key 119 barrier following the unexpected upbeat message from the ECB at its Thursday's event, although the move up lacked follow-through and motivated spots to return and close the session in the 118.10 to 15 band. It is worth recalling that the ECB said markets should not overreact to the recent appreciation of the single currency. The dollar index was down 0.1% at 93.285. Dollar year is at 106.16. This is today's market news. Thanks for listening. We'll see you next time.